Class 11 Accountancy Numerical Problem Solutions. Presented by Eduxir.com. In this video, we are going to provide bank reconciliation statement, unfavorable balance of cash book solutions, problem 11 solution. The problem statement is as follows. Prepare bank reconciliation statement. Overdraft shown as per cash book on December 31st, 2000 plus 10,000 rupees. Bank charges for the above period also debited in the passbook 100 rupees. Interest on overdraft for 6 months ending December 31st, 2000 plus 380 rupees debited in the passbook. Checks issued but not encashed prior to December 31st, 2000 plus amounted to 2150 rupees. Interest on investment collected by the bank and credited in the passbook 600 rupees. Checks paid into bank but not cleared before December 31st, 2000 plus were 1100 rupees. Before we proceed with the analysis of these particulars, let us first recap about why there is a need for reconciliation. By preparing the bank reconciliation statement, we get an idea about why there is a difference between the cash book and the passbook. The difference could be due to timing difference on recording the transaction, errors made by the business or the bank. Few reasons of the timing difference are checks issued by the business but not presented for the payment. When the business issues a check to the supplier or creditors, they are immediately entered on the credit side of the cash book. The supplier or creditor has to encash this check by presenting it in the bank. In some cases, the creditor or supplier may not present this check immediately in the bank. So, when the bank statement is received by the firm, as this check is not yet presented by the creditor or supplier, this will not be there in the bank statement. This is one reason. The next reason is checks paid into the bank but not yet collected. When the business receives checks from its customers or debtors, they are immediately recorded in the debit side of the cash book. So, the cash book shows more amount to be available in the bank. These checks could be from a bank which is not in the same city or town. Sometimes, the business might have an account in one branch and the check could be from a different branch altogether. In such cases, the bank may not have collected this check amount by the time the bank statement is received by the firm. So, there will be difference in the cash book and the passbook balances. This is one more reason. The next reason is direct debits made by the bank on behalf of the customer. Sometimes, the bank deducts the amounts for various services. The business may not be aware of these deductions. So, these deductions which fall under expenses may not have been recorded in the cash book. For example, the bank charges and interest on overdraft in case of current account might have been deducted by the bank, but the business knows about these deductions only after the bank statement is received. This is one other reason. The next reason is interest and dividends collected by the bank. When the bank collects interest and dividends on behalf of the customer, then these are immediately credited to the customer's account. Note here that the term customer refers to our business and not our business customers. In this context, our business is customer to the bank, right? So that's why the bank refers to the business as customer. In other words, this means that the interest or dividends collected by the bank on behalf of our business. But the business will not know about these transactions until the bank statement is received. So there will be difference in the cash book and the bank passbook. There are other reasons also, but to limit the scope of these differences to this problem, let us consider only these 4 reasons for timing difference. Also, the problem does not have any particulars related to the errors made by the business or by the bank. So, we will not discuss about these errors here to limit the scope of this recap only to this problem. Now, with this information at our disposal, let us now proceed with the analysis of each of these details in the problem. Here it is given that the overdraft balance as per the cash book is 10,000 rupees. As you know, the overdraft in the business cash book is credit balance. Also, when there is an overdraft, we call it unfavorable balance of the cash book. So, in this problem, the overdraft as per the cash book is given and we need to find the balance in the bank passbook. Let us enter these details into the bank reconciliation statement. Let us first write the title as Bank Reconciliation Statement as of December 31st, 2000 plus. Let us have the individual columns for serial number, particulars, amount that should be added, and the amount that should be deducted. Let us first write the particulars as overdraft as per cash book. As this is a credit or unfavorable balance in the cash book, we need to write this amount of 10,000 rupees in the minus amount column. That completes the recording of these details in the bank reconciliation statement. Let us now take up the next details. In this case, the bank charges of 100 rupees are debited in the passbook. The bank charges are directly debited in the bank passbook by the bank. However, the business does not know about these bank charges until the bank statement is received. So, these bank charges will not be credited in the business cash book. So, there will be difference in the business cash book and the bank passbook balances. So, we need to deduct this amount from the cash book balance to get the passbook balance. With this analysis at our disposal, let us now proceed with the recording of these details into the bank reconciliation statement. Let us first write the serial number. Let us then write the particulars as bank charges. Let us write this amount of 100 rupees in the minus amount column. That completes the recording of these details into the bank reconciliation statement. Let us now take up the next details. Here it is given that the bank has charged an interest of 380 rupees on the bank overdraft. As you know, when there is an overdraft balance in the bank passbook, it is similar to some loan taken by the business from the bank. So, the bank charges interest on the overdraft amount. This interest amount will be directly debited in the bank passbook. However, the business knows about this interest amount only after the bank statement is received by the firm. So, this interest amount will not be credited in the business cash book. So, obviously, there will be difference between the business cash book and the bank passbook. So, we need to deduct this interest amount from the cash book balance to get the passbook balance. With this analysis at our disposal, let us now proceed with the recording of these details into the bank reconciliation statement. Let us first write the serial number. Let us then write the particulars as interest collected by bank on overdraft. Let us now write this amount of 380 rupees in the minus amount column. That completes the recording of these details into the bank reconciliation statement. Let us now take up the next details. Here it is specified that the checks for 2,150 rupees were issued but not encashed. So in this case, the business has issued 2 checks. Before issuing these checks to anyone, these checks amounts will be credited on the payment side in the cash book. However, these checks were not encashed by the time the bank statement is received by the business. So these check amounts will not be debited in the bank passbook. So clearly, there will be difference between the business cash book and the bank passbook. So we need to add these checks amount to the cash book balance to get the passbook balance. With this analysis at our disposal, let us now proceed with the recording of these details into the bank reconciliation statement. Let us first write the serial number. Let us then write the particulars as checks issued but not yet encashed. Let us now write this amount of 2,150 rupees in the plus amount column. That completes the recording of these details into the bank reconciliation statement. Let us now take up the next details. Here it is specified that an interest amount of 600 rupees on investment is collected by the bank and credited in the passbook. As we have discussed earlier, the banks can be authorized to collect the interest on investments on behalf of the business. However, when the bank collects this interest amount on the investment, the business does not know about these collections until the bank statement is received. So, this interest amount will not be debited in the business cash book. So, obviously, there will be difference in the cash book balance and the bank passbook balance. So, we need to add this interest amount to the cash book balance to get the passbook balance. With this analysis at our disposal, let us now proceed with the recording of these details into the bank reconciliation statement. Let us first write the serial number. Let us then write the particulars as interest on investment collected by bank. Let us now write this amount of 600 rupees in the plus amount column. That completes the recording of these details into the bank reconciliation statement. Let us now take up the next details. Here it is specified that the checks for 1100 rupees were paid into the bank, but these checks were not cleared by the time the bank statement is received by the firm. As you know, before paying these checks into the bank, the business debits these checks into the business cash book. However, as these checks were not cleared by the bank by the time the bank statement is received by the business, these checks amount will not be there in the bank passbook. So clearly there will be difference in the business cash book and the bank passbook balances. So we need to deduct these checks amount from the cash book balance to get the passbook balance. With this analysis at our disposal, let us now proceed with the recording of these details into the bank reconciliation statement. Let us first write the serial number. Let us then write the particulars as check deposited into the bank but not yet cleared. Let us now write this amount of 1100 rupees in the minus amount column. That completes the recording of these details into the bank reconciliation statement. In fact, we have completed the recording of all the details into the bank reconciliation statement. The next step is to find the balance as per the passbook. Now the total of all the entries in the plus amount column is 2750 rupees, and the total of all the entries in the minus amount column is 11,580 rupees. From 11,580 rupees, if you subtract 2,750 rupees, we get 8,830 rupees. This is the passbook balance, and let's now record this. Let's first write the particulars as overdraft as per the passbook. As we have started with the cash book overdraft balance, we need to write the passbook overdraft balance of 8,830 rupees in the plus amount column. Now the total of all the entries in the plus amount column is 11,580 rupees. Similarly, the total of all the entries in the minus amount column is 11,580 rupees. With that, we have come to the end of this solution. Thanks for watching. Eduxir.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.